The cheaters.
This. I'm just. I'm wanting to change.
Other view development.
We're just $3.
That's all you need.
I wish I spent 650 last week.
Like to call the meeting to order. Moved by Councillor Kotick, seconded by Councillor Hudson, resolved that the special meeting commence at the hour of 3:02 p.m. And be it further resolved that council acknowledges that we are meeting in the Robinson Superior Treaty area on lands that have been traditionally used by several Indigenous nations, but we would like to pay special recognition to our closest Indigenous neighbors, the community of Bigdigan Anishinaabe and Nimizigamek Anishinaabe First Nations. We wish to recognize the long history of the First Nation and Métis people in our region specifically and show respect to them today. All in favor? Carried. Okay, any disclosure of pecuniary interest or general nature thereof? Seeing none. Approval of the agenda. Moved by Councillor Hudson, seconded by Councillor Kotick. Resolved that the agenda be approved as circulated. All in favor? Carried. Okay, delegations and presentations. Moved by Councillor Kotick, seconded by Councillor Hudson. Resolved that council has been provided a presentation by Wayne Grant Thornton of the consolidated financial statements for the corporation of the Township of Manitowoc for the year ending December 31st, 2022. Welcome.
Thank you. You should have with you a copy of two documents that I submitted. One of them is the draft consolidated financial statements and the other one is report to council. So I'd like to start with the actual financial statements first. And just before we get into the actual financial statements, just kind of want to spend a minute reminding everybody what an audit is and what an audit isn't. So when we do an audit, we audit for reasonable assurance, not absolute assurance, because you can't audit for absolute assurance. You'll never get information on stuff that's not there. And we also audit for what we consider a material misstatement. So we're not saying that these financial statements are perfect and have zero errors. What we're saying is that we feel we've done sufficient work to identify material misstatements. So for example, if we identified a misstatement of $20,000 and we were aware of that misstatement, that would not be considered material and we wouldn't change our audit opinion. But if, for example, we found a $200,000 misstatement, that would be considered material, and we would first ask management to correct that misstatement. And if for some reason management chose not to correct that level of misstatement, then that would be material and it would actually change your audit opinion. So again, reasonable assurance of a material misstatement. Also, when we audit, we don't audit every account, every dollar, every transaction that flows through the books. At the planning stage, we identify areas of risk, high risk and areas of lower risk. And by default, we spend more of our audit efforts in areas of higher risk and less audit effort in areas of lower risk. And also, although we look at your internal controls sufficient to decide how we might audit a balance or a series of transactions, this is not an opinion on your controls. It's strictly an opinion on the financials. And we've assisted management in preparing the financial statements and the related note disclosures. However, the financial statements belong to management. So management's responsibilities for the financial statements with our assistance. Don Grant Thornton completes the audit and issues an audit report. And since there is no separate audit committee, then council is the group deemed to be those in charge of the governance, and council has overall responsibility for financial reporting. So in our report, I'll just read our audit opinion. In our opinion, the company consolidated financial statements present fairly in all material respects the financial position of the corporation of the Township of Manitowoc as at December 31st, 2022, and its results of operations, its changes in its net financial assets and its cash flows for the year then ended in accordance with Canadian public sector accounting standards. In other words, it is a clean audit opinion. So if we jump to page 3, which is the consolidated statement of financial position. On this statement, you'll see your assets and your liabilities, and your financial assets are comprised of cash and cash equivalents, which is strictly balances in the bank, and your portfolio investments, which is some investments in bonds with one investment as the holder. And the investments are recorded at their market value. So there was a decline in market value, so that has to be reflected at the lower of cost or market. Your taxes receivable are comprised of your 2022 taxes, as well as all prior year tax arrears, as well as interest and penalties on those taxes. So of the total taxes of 1.04 million, 1.054 million, there is an allowance for doubtful accounts of 163,000. And of your taxes, about 55% of the tax balance are current taxes. There was an increase from the year before in terms of the allowance because there was an allowance for township-owned properties where the taxes receivable were written off, and some of them had to do with appeals to MPAC. Accounts receivable, those would be amounts owing to the township, everything except taxes receivable. So things like general accounts receivable for water, about $248,000. Your HST rebates, because you pay HST on your invoices, then you submit claims for rebates. So there's about 101,000 owing on HST rebates at year end, and about $70,000 owing from grants receivable for items that are claims based, where you spend the money and then you submit a claim to get the grants. So there's an increase from the year before, and that mostly due to the grants receivable. So about $20,000 for the NHFC internship grant, and about $50,000 for the FCM asset management grant that were receivable at December 31st and were received after. Also, your water receivables in general were just up 31,000 from the year before. So that gives you total financial assets of about 14.1 million. Then we look at your liabilities. Your accounts payable and accrued liabilities. These are all amounts that the municipality owes to third parties, including all payables and all accruals. And you'll see a decrease from the year before, and that's because in 2021, there was about $198,000 accrued for fire equipment. Then you have your due to trust funds, which is just the balancing of the books, because your trust funds are not reported in these financial statements, but they are part of your general ledger account. So this is the balancing of the due to. Then your deferred revenue. So when you receive funding for which you have not yet met the stipulations to have earned that funding, for example, you receive money, but you haven't incurred the eligible expense yet, then you can't call that revenue until you've met the eligibility criteria. So that funding gets deferred. It'll be recognized in the future. So the deferred revenue balance is comprised of things like your gas tax, about 445,000, your OSIF funding of about 980,000, your NORDS funding of about 190, and your MyRide funding of about 148,000. You'll see a significant increase from 2021. And that has to do with the fact that in 2022, you received about 368,000 of OSIF funding that was not spent and therefore adds to the deferred balance, as well as 187,000 of NORDS funding that was not used and is added to the balance. Then you look at your other liability, which is your landfill closure and post-closure liability. This is an estimate because you have to make assumptions regarding the landfill usage, the annual volume used, the remaining capacity for the landfill to accept waste, and then your closure, and then your post-closure costs relating to once the landfill's closed, the maintenance in accordance with the ministry standards. So there's a lot of assumptions in there, but there was a change in one assumption, which was a decrease in the assumed inflation rate from 3.4 in 2021 to 3% in 2022. So that's changed your liability a little bit. So it would have gone up for more usage, but then the change in assumption has made it go down. So that gives you, if you just deduct your liabilities from your financial assets, it gives you what's called net financial assets of 10.5 million. So that's a positive figure, which means that you've got funding to, you've got assets to fund activity that hasn't happened yet. So it's a positive figure. Then you look at your non-financial assets. So these are things that are not cash or not going to turn into cash anytime soon. And that the bulk of that balance is made up of your tangible capital assets. Now that $21.3 million is your net book value. So it's strictly the accounting exercise of capitalizing your assets at what you paid for them, less the annual amortization for amortizing the assets over their estimated useful lives. It is not representative of fair value, for example, if you were to sell those assets. But you're not in the business of selling your assets because the bulk of that has to do with your infrastructure to deliver your municipal services. So again, net book value The change is due mostly to an increase about $565,000 for additions, offset by an amortization reduction of about 1.6 million. And your largest additions were things like your paving, about $288,000 in paving. And you've got some other items, inventories and prepaid small balances regarding items that you've paid for, not used yet. So that gives you what we call accumulated surplus for accounting purposes. But I want to pause here for a minute and jump to Schedule 1 on page 21, because it's really important to understand what this accumulated surplus means for accounting purposes. So accumulated surplus in Schedule 1 has different components of it. So just by the fact that you account for tangible capital assets, that accounts for 21.3 million of that 32 million. So the accumulated surplus is made up of things like your reserves and your reserve funds, items that are set aside and spoken for, as well as your unfunded liabilities, which reduces it, which is your landfill closure, because you have not yet levied your taxpayers for that liability. So again, accumulated surplus is not the same as operating surplus, and it's not the same as annual surplus. With respect to the $32 million is not money available to spend, for example. So if we jump back to page 4, page 4 is your statement of operations where you report your revenues and your expenses. So your total revenues are 7.7 million compared to a budget of 8.1 million. So you're coming in roughly at 95% of budget. And if we just look at some of the significant variances, you'll notice in your residential and farm taxation, there's an increase from the year before. And that has to do with in 2021, there was a significant write-off of township-owned properties of about 546,000. In 2022, it was only 139,000. So a significant decrease there. That's led to an increase in revenue. Your user charges, compared to budget, pretty much most lines came in over budget. So things like food sales and water billings, all those items, just small variances that added up to being over budget in user fees. In your grants, below budget on your Government of Canada, you had budgeted for some capital spending, but some of the projects didn't take place. They got delayed. So the revenue isn't there. And when you look at your investment income is comprised of the actual interest investment income that you've earned, offset by any fair value adjustments to the investments. And you don't budget for that fair value adjustment. So you had better interest recoveries this year and a smaller investment write-down. So that's led to a positive figure this year. Your other income, you had budgeted a lot of land sales. Roughly 557,000 is included in that 2022 budget. But those didn't materialize. You actually only realized about 53,000 of land sales in 2022. And when you compare it to the year before, you did in 2022 get about $150,000 from a loss insurance payment that was not there in 2021. When you look at your expenditures, your total expenditures is $8.4 million. Sorry, on the next page, $8.4 million compared to a budget of 8.474. So you're coming in roughly at 99.73%. So almost 100% of budget. There are differences in some of the expenditure lines. So when you look at general government, the largest difference between the actual and the budget has to do with tax write-offs relating to an MPAC appeals. And then in terms of the year before, your revenue is up from the year before because in 2022, there was fewer write-offs than 2021, as we just talked about in the revenue side. And you had a credit balance. In 2021, you had a credit balance because there was a correction of the allowance for doubtful accounts. Protection to property and services, no significant variances there. In your transportation services, you're below budget because you've budgeted for items, for example, that didn't take place, such as about $31,000 for tree clearing that didn't occur. And your salaries, some of your salaries were below budget, as well as your road materials were below budget. However, you are higher than the year before, and about $72,000 of the increase from 2021 is related to salaries, and about $62,000 of the increase is related to repairs and maintenance. In your environmental services, you have a decrease in your landfill liability. So in decrease in the liability, the other side is a credit to the expense. So that explains the variance. Health services, no significant change there. Manitowocq Public Library. We'll talk about this shortly in terms of the Schedule 3, but again, not material transactions. No significant changes in social and family services. In your recreation and cultural services, you've got a significant increase from the year before, and that's due to mostly community center supplies and maintenance are up by 46,000, and the rest of it relates mostly to increase in salaries in all departments. And your planning and development, again, a small change from the year before. So that gives you, for accounting purposes, a deficit of $675,000. You started the year at 32.7 million, so you've decreased that to 32.1, as we talked about in Schedule 1. What you'll notice in Schedule 3, I won't go through it in detail, but in prior years, in 2021 and in prior years, the township was issuing a separate audited financial statements for the library, but there's no user of those financial statements because the ministry only requires audited statements if you hit a certain level of funding received from the ministry. So instead of doing separate standalone library financial statements, the library financial statements they've always been incorporated in the consolidated statements, but they were included in recreational cultural services. So they got pulled out and put on their own line. So that's why we have the library as a separate line this year, and it wasn't there last year. And same in Schedule 3. If you go to Schedule 3, you'll see the library is a separate column. So all of the details of the revenue and the expenditure objects are included in Schedule 3 for the library. So if somebody wants to know what are the library results without their own standalone financial statements, they can go to Schedule 3 and see the library, which before had a separate financial statements, plus they were included in the consolidated recreational and cultural services. So they were always in your consolidated financial statements, but not explicitly separated. Now, instead of doing standalone statements, they're just being separated in these financial statements. So that's a slight change in presentation from the years before. Page 6 is the schedule of statement changes in net financial assets. And this is a statement that you don't see in your internal financials, but it is a requirement of the accounting standards. And this statement effectively starts with your annual deficit, and it accounts for items that affect your net financial assets that flow through the income statement, but don't for example, items that use up your cash. So when you acquire a capital assets, it's not expensed, and therefore it's not in your deficit. However, it could have used up cash, and therefore it's out of your net financial assets. So these items are all items that flow through on the previous 2 pages to account for the fact that you started the year at 10.39 million of financial assets, and you've increased your financial position by $358,000 because something like amortization expense is included in your deficit, but it's not cash related. It's just an expense that's not related to cash. The next page is your consolidated statement of cash flows. Again, another financial statement that is not included in your internal financials. And the purpose of this statement is to reconcile how you can have an accounting deficit of $675,000, but your bank balance actually went up by $563,000. So effectively, something can be called revenue before you actually see the funds. That's why you have receivables. And something can be called an expense before you've paid the invoice, and that's why you have payables. So depending on the timing of collections of your receivables and the timing of when you make the payments on your payables, as well as things like acquiring capital assets, which again are not expense, but they use up cash, and then adding back non-cash items such as your amortization in your landfill and your investment portfolio write down. All of these items come from the previous pages, and effectively it's trying to explain how the cash is moving in and out with respect to explaining we have an accounting loss, but we've actually increased our bank by $563,000. And the rest of the pages, number 1, summarizes all of your accounting policies. So in 2022, there were no changes to the township's accounting policies. And there was also no mandated changes under Canadian Public Sector Accounting Standards. In 2023, we'll get to that shortly, but in 2023, there are going to be 2 significant changes to the accounting policies required to be in accordance with Canadian Public Sector Accounting Standards. But effectively, other than the library changes to the presentation in Schedule 3, there are no other changes to pages 8 onward. So before I get into the audit results, are there any questions on the actual statements themselves?
Seeing none.
So the next report is Don Grant Thornton's report to those charged with governance. And under the Canadian auditing standards, the reporting, there is a requirement to communicate with those charged with governance regarding the results of the audit. So the financial statements are prepared in accordance with Canadian Public Sector accounting standards. The audit is completed in accordance with Canadian Generally Accepted Auditing Standards. So this report, I won't go through all the pages, but effectively, when this was sent out last week on page 1, sort of updating where we are with the audit. So the audit's complete. And when this was sent out last week, there was a couple remaining items. One of them is receipt of the management representation letter, which we just received this afternoon. The second one is hopefully council approves the draft financial statements. And then third one is, although the year end was December 31st, 2022, our report date hopefully is today, and therefore we have to update subsequent events up to today, and we've completed that as well. So assuming council approves these financial statements today, then we will be able to release and finalize these financial statements. When we look at page 2, CAS 315, so as I mentioned, there was no accounting changes in 2022, but there were auditing changes in 2022, and there is some more details in the report, but effectively the auditing standards changed that required a bit more audit work when it comes to identifying and assessing risks of material misstatement to meet that new standard. So we've completed that work and it's incorporated in our audit results. When we look at page 3, we always have to, as part of the audit, look at sort of what's happening in the economic environment and so forth. And 2022 was sort of at the tail end of the COVID-19 pandemic. So we always look at what's happening to make sure that it has no impact on the financial statements, whether it requires extra disclosures or accruals, for example. Based on our work and our discussions with management, we've agreed to remove the COVID-19 note that you would have seen back in 2021, as it's no longer relevant, and the township was sort of back to normal in 2022 when it comes to the significant financial items. When you look at your significant transactions, you've got your capital expenditures. So this summarizes sort of the major additions, and we review capital asset additions and disposals recorded. We make sure that they exist and that they're appropriately amortized based on your policy. Make sure that there's no management bias. Your OMPF funding is a big funding source, and we just make sure that the full amount has been set up, and it's unconditional funding, so it gets recorded as revenue as soon as you receive it. Your landfill closure and post-closure liability, as previously discussed, it's an estimate. So we look at the most current information that's available, as well as the assumptions regarding inflation and interest rate. Again, making sure that there's no bias in that calculation with the assumptions that are used. Significant risks. When we look at, there's a presumed risk of fraud under the auditing standards in revenue. And in this case, although you've got various revenue streams, the risk of fraud is really attached to the grant revenue stream with respect to revenue recognition, because there could be a risk that you've recognized grant revenue too early, or that you've recognized grant revenue for expenses that haven't been incurred yet when you haven't met the conditions of those grants. So we review the grant agreements. We make sure that we understand all the stipulations surrounding those agreements, and we trace a sample of transactions to make sure that you've incurred the eligible expense, to then turn around and recognize that revenue. So we had no exceptions there. There's another presumed risk of fraud with respect to management override, and that comes from the fact that no matter how good your controls might be over who approves invoices, who signs checks, all of those good things, someone at the very end, using a journal entry, can move things around and manipulate the records by journal entry and undo all of that good stuff. So we look at journal entries just to make sure that they have a business purpose and that the journal entries are not used to manipulate the outcome of the financial statements. So no exceptions were noted. And fraud and legal acts, we always make sure that we try to understand the respective legislation that's applicable as it relates to any potential impact on the financial statements, so we didn't note any fraud or illegal acts in the work that we've completed. In terms of your accounting practices, you've got estimates with respect to allowance for doubtful accounts and landfill liability in terms of significant estimates that require judgment. So the allowance is 163,000 at the end of the year with respect to taxes receivable for amounts that are doubtful. And then landfill liability, again, as discussed, is based on various assumptions with respect to the ending liability. In terms of the other areas that we focus on, we just make sure that we try to keep up with all the regulations. And if there were any legal matters that required confirmation, we would send a legal letter, but that was not required for 2022. And we just wanted to highlight that we received full cooperation during the audit from management. And we were provided all access to all the required information and full cooperation. So if we jump to page 9 is a summary of what we call unrecorded misstatements. So these are the items that are not reflected in the accounting records, and they are not material, so they don't change our audit opinion, even though they're not recorded. The first one is just again, it's an estimate, but the understatement of the allowance for doubtful accounts. So based on the work that we've done, there's a potential understatement of almost $31,000, but again, it's an estimate. And then the other two items are errors noted in 2022 relating to 2021 balances. So there was an overstatement of accrued liabilities in 2021, as well as an overstatement of deferred revenue. Those were corrected in 2022. So by the end of 2022, everything's all good, but effectively it's an opening error for things that should have happened in 2021. Again, overall, not material, so we're okay issuing a clean audit report, even if these items are misstated. We confirm our independence with respect to be the auditors. We have to remain independent throughout the whole process. So we are confirming that we've achieved the independence objectives, and that although we've assisted management with drafting the financial statements, management's taking ownership of the financial statements, and therefore we've resolved our any independence issues. I don't want to go through all the technical updates in detail, but just to highlight that in 2023, there's two significant accounting changes under Canadian Public Sector Accounting Standards. One of them is financial instruments. So although the financial figures may not change too much as a result of the financial instruments adoption, you will see in 2023 a whole bunch of new financial statement note disclosures. There's a lot more stuff to disclose. And then asset retirement obligations, that's a big one. And my understanding is that management has already begun that work for that. But asset retirement obligations is a significant standard with respect to what you have to record on your books with respect to liabilities. So the old standard on landfills is going to be gone, but the landfill liability will remain because it is captured under asset retirement obligations. But what's likely going to happen with the new standard is your liability is going to go up significantly, because under the old standard, you only recorded liability for the volume that you use. So if you're only 20% used on volume, you only record 20% of the liability. Under the new standard, you record 100% of liability the date you become legally responsible for it. So that's going to be a significant increase. And then the other one is the asset retirement obligations also covers things like asbestos in buildings, liabilities that you've never had on the books before. So you have to do an inventory of all your assets and go through and identify, is there a risk? Mostly it's coming from asbestos, but it could be other contaminants, but effectively coming up with another accrual for asset retirement obligations that are not landfill related. So those will be the significant changes in 2023 financials. Any questions on that report?
Seeing none. No, seeing none.
Okay, so that's it for me.
Okay, thank you very much for that report. Okay, and further, that upon conclusion of council's review, council does hereby approve the draft version as presented. All in favor? Where's Tony on?
We lost her at 3:23. She will join us.
Okay, so with my vote, we're good. All carried.
Thank you very much, Judy.
Thank you. Have a good day.
Two. Okay. Okay, moved by Councillor Hudson, second by Councillor Conick, resolved that council is in receipt of administration report TR 2025-06 submitted by Aaron McGregor, treasurer, regarding the 2025 municipal operating and capital budget.
Thank you, Mr. Chair. I think I'll be okay without a microphone. So before you is the final version of the 2025 municipal operating and capital budgets. Also attached is the results of our public consultation efforts and survey results. I do highlight in the report that there are 14 responses among the survey results that okay. Thank you. So, as I was saying, included are the results of our public consultation survey. As I indicated in my report, 14 of the responses are identified by administration as made in bad faith. They are made using generated or burned email addresses. We did notice that there was a pattern that there were, I believe it was 6 received prior to one of our last sessions, and they all came from the same IP address. Subsequent to that, it was publicly announced that we were aware that they were the same IP address, same patterns, same generated email addresses. So following that pattern, we do see that IP addresses changed on the other submissions, but they follow those same patterns. So of course, feedback like that does undermine our efforts to see what the community's feeling. Of course, administration is grateful for the feedback we received that were made in good faith. And of course, we always encourage anybody with questions, concerns, or opinions to reach out through to municipal staff or to council to communicate those. As we've touched on through the budget process, it is difficult to lower taxes without lowering service levels. So a lot of the feedback that we look for with respect to concerns around taxes is what areas would you like to see us make the cuts that would be necessary to deliver decreases in tax rates. But if council has any questions at this time regarding the budget, I'm happy to answer them, but before we jump into that, I'll circle back to the donation policy. These donation policy applications and recommendations were made as part of the last report. So if there are any questions about those, I can also answer that.
Questions? No. Lori Lynn's not back, no. No questions. Yes, the donation requests, are they all approved?
Yes, all of the donation requests are approved. The one comment that I would make is one of the applications, we've approved a different donation than what was specifically requested. So we were requested to directly provide assistance with the camera setup at the Golden Age Club. Because the club purchased some cameras and some help configuring and setting them up. We don't have the in-house resources to simply provide that. So in lieu of that, we've recommended that we approve a donation for the Golden Age Club to seek out that help themselves and then submit to us for reimbursement out of that.
Okay, perfect.
And then the remaining are, just to touch on them, essentially they're all approved. Some of them are approved with a little bit of a narrowing of the scope of what they requested. So for example, well, I won't give a specific example, but one request might be to for X, Y, and Z, 3 different functions, and we might approve one of the functions, and all of these donations do come with a letter provided to the organization, and we do ask them to sign off on reporting back to us on their activities and expenses.
Okay, any other questions? No. Sounds good, thank you. Okay, and further that council received the attached report for information, and further that council approves the donations for the 2025 under bylaw 2023-58 as outlined in the attached report. All in favor? Carried. Okay. Bylaws. Moved by Councillor Hudson, second by Councillor Kotick, being a bylaw to provide for the adoption of the tax rates and to further provide for penalty and interest in default of payment thereof for 2025 be ready first and second time. And furthermore, be ready third time, pass the numbered as bylaw number 2025-27. All in favor? Carried. Moved by Councillor Kotick, seconded by Councillor Hudson, being a bylaw to adopt the estimates for the sums required during the year 2025 for general purposes of the corporation of the Township of Manasquash, be ready first and second time. Furthermore, be ready third time, pass the numbered as bylaw number 2025-28. All in favor? Carried. Moved by Councillor Hudson, second by Councillor Kotick, being a bylaw to set the 2025 transition ratio and set rate reductions for prescribed property subclasses, be ready first and second time. And furthermore, be ready third time, pass the numbered as bylaw number 2025-29. All in favor? Carried. Okay. Session, right? Nope. Just okay. Moved by Councillor Kotick, second by Councillor Hudson. Whereas section 239(4) of the Municipal Act 2001 SO 2001 C25 provides that before holding a meeting or part of a meeting that is to be closed to the public, the municipality or local board or committee of either of them shall state by resolution the fact of holding of the closed meeting and the general nature of the matters to be considered at the closed meeting. Now therefore be it resolved that this meeting is hereby closed to the public as the subject matter being discussed falls under the following sections. Section 239(2)B, personal matters about an identifiable individual, including municipal and local board employees, staff matters. Section 239(2)B, personal matters about an identifiable individual, including municipal and local board employees, staff matters. All in favor? Carried.